Welcome to the Trading with WebRDD YouTube channel. Today is another daily forecast that we are going to provide you. Yesterday was another winning day for us, just like in the last few days. We are getting continuous profits, and our trading methods are working perfectly with the current market. And these are professional trading methods, and that's why I always mention that you can use these methods for any market. You can see after the price hit the 1 hour chart 20 EMA, that happened just after I created yesterday's video. I mentioned that setup in my YouTube channel. You can see how I drew it after the price hit the first buy zone. It could go further up, and you can use the confirmations in the 15-minute chart that I explained earlier. And that is exactly what happened, just as I said. After that pullback and the price hitting the 20 EMA with our first buy zone, you could enter the market using the fair value gap. After creating the 1 hour bullish candle, a fair value gap appeared. After 2 candles, that gap was touched and created a bullish wick with a bullish candle. I entered the market at that point and placed my stop loss just below this wick. You can also place your stop loss below the fair value gap, but that's a little larger for me, so I kept it around 70 to 50 pips. After that, you can see there was no pullback until now. Currently, there is some pullback, but I believe it will continue moving up after closing that fair value gap. That price gap happened this morning when the day changed. Prices came down to close that area and now are moving up again. That's why I didn't close my position. So my trading plan is that I do not close my trades unless the price crosses below the 15-minute 20 EMA. Sometimes I close my trade after seeing a 1 hour bearish candle when I'm in a buy order, but this time I did not close it because I knew the price should come down to close that gap first. After that, I expect it to go further up because gold is flying. It's like an unstoppable train. We need to get in at the right time because it doesn't stop often. These kinds of setups give limited opportunities to enter the market. One of those opportunities occurred yesterday, and we grabbed it. You can see the result. Already more than 1,060 pips in profit, currently around 1,140 pips. I expect it to go further up. If not, I will close it once the price crosses below the 15-minute EMA. Now it's a good time to check what we can do in today's market for a clear view. I'm going to delete all the old setups to make the chart clearer. I'll hide and delete all my previous buy zones. I'm only interested in buying this market even though the price is currently overbought. I'm not interested in selling at all. First, I'm going to the 4-hour chart to check whether there is any new support or resistance we can add. I can see one area around 2420.5. I'd like to mark that as a new resistance, which is now acting as support. That's the only new technical line we can add for today's market. After that, gold is still flying upward. Now I'm going to draw our buy zones. You can see there's a doji candle that we can use to draw our first buy zone. I would like to readjust it using the 1 hour chart where I can see another pullback that matches with the 4-hour candle. I'll draw that buy zone using the wick created before that bullish candle. These are the 2 buy zones I can draw for today. I don't think the price will drop that far today, but if it does, it may still give us an opportunity to enter. However, today is Friday, so the movement might be limited. Anyway, I'm now switching to the 1 hour chart to readjust these buy zones slightly and keep them as I drew before. I also see another bearish candle within this bullish market in the 1 hour chart, and then I'd like to draw another buy zone there, 630. These are the 3 buy zones we can draw in today's market, and I'm hoping to enter the market if the price comes down any of these areas. Now I'm activating my EMAs. In the 1 hour chart, the 2 EMAs are running parallel. The 20 EMA aligns with the first buy zone and the 50 EMA with the second buy zone. In the 4-hour chart, the third buy zone is just below the 4-hour 20 EMA, giving us 3 good confirmations for possible entries if the price drops there. Now, I'm going to draw the best possible setups to help you identify the market structure when it comes down. The first buy setup is within the first buy zone. If the price comes down to the 1-hour chart, you can enter after liquidity is grabbed below the 20 EMA. Wait until a 1-hour bullish candle forms. Then switch to the 15-minute chart and check whether any 15-minute fair value gaps are available. If you see one, wait until the price touches that fair value gap. After a bearish candle forms, wait for a bullish candle on the 15-minute chart. 8:15. Once that bullish candle completes, you can enter the market. That's the perfect way to enter this setup. Take your first profit at the turning point and hold the position until the price crosses the 15-minute 20 EMA or reaches the Fibonacci levels. That's the first setup we can expect today if the price doesn't drop too far. The next setup is at the second buy zone. You can also enter there with a 15-minute fair value gap, taking your first profit at the 20 EMA and the second at the turning point. These are the two setups we can expect in the 1-hour chart. For the third setup, let's move to the 4-hour chart, which gives a clearer view. If the price drops there, which could happen today because it's Friday and the market is overbought, the 4-hour 20 EMA will act as strong support. Wait until liquidity is grabbed below the 20 EMA. During that time, the price could touch our third buy zone, and you can enter the market there. You can take your first profit at the second buy zone and vice versa. These are the setups I'm expecting today. I'm not interested in any sell trades in this market because although there's a pullback now, it could be temporary. Entering as a seller would be risky in this kind of bullish market. Finally, on the daily chart, there's something important I want to mention. There are 5 consecutive bullish candles, which is not common in the Forex market. This suggests a pullback or a bearish candle might be needed soon to balance the market. Therefore, be a bit cautious when entering the market today as a buyer and make sure you have strong confirmations before entering. These are the key things I wanted to share with you today. We'll meet again in our next video, the weekly forecast for next week. Until then, stay safe. If you really like my videos, please like, share, and subscribe. Thank you very much.